Shares of Nvidia seeing a sell-off midday, leading to the tech giant's decline today. Our next guest today sees a big concern with Nvidia and its customers. For more, let's welcome in Tim Pagliara, CapWealth Chief Investment Officer. Tim, it is good to see you. So maybe we'll start there, Tim, with Nvidia. You know, investors have piled in. Tim, the street loves this name. I mean, nearly 90% of analysts who cover Nvidia say you should buy it, even here. But you're cautious about Nvidia. How come?
Well, for the very reason that there's so much consensus. I think it was in a 10-day period, Nvidia added more market cap than Warren Buffett created in Berkshire Hathaway in 60 years. So that has to give everybody a little bit of pause about, where things are headed. I was asked in an interview yesterday about which tech company will hit the $4 trillion mark first. And I said, well, I think you got to break that into two parts. Which one will hit first, and then which one's going to be sustainable at a $4 trillion company. And I chose Microsoft, but I think Nvidia will probably at this point hit first, just because of the fervor and consensus that everybody thinks that you've got to own that to be successful long term.
Tim, it's Julie here. When you look at Nvidia, what is your extrapolation to the rest of the market? In other words, is what's going on with Nvidia a risk sign for the rest of the market, or do you think that it's just sort of specific to it?
I think it's a little bit of both. But I think, for the value investors, the people that look in places where no one else is looking, I think it's a great opportunity because, you have Nvidia, the market cap of it exceeds energy, it exceeds utilities, it exceeds the value of GE. The last time we went through something like this was in 1998, 1999. Ironically, the darling of that era was Coca-Cola. It had been on an 18% per year compounding, 21% annual increases in dividends. And you could have taken a dozen companies and you could have owned those, or you could have owned Coca-Cola. It's the same thing with Nvidia right now. You can own the entire energy complex, the entire utility complex, General Electric, or you could own Nvidia. You could have 15 Intels, I think is the number, or maybe a little bit more, or you can own Nvidia. So how sustainable that is ultimately with long-term earnings and profits, given the inherent nature of the chip industry, it's not a good bet from my standpoint, long term, in my experience.
So Tim, what would be, in your opinion, a better bet, a smarter bet right now? Give us some ideas of where you would be more comfortable committing capital.
Well, I think it's, when you look at artificial intelligence, we look at kind of a picks and shovel type of approach, like in a gold rush, sell the shovels, sell the picks. In this instance, it's the electricity, complex. I mean, no one really talks about it, but, a Google search today compared to a Google search with AI takes 10 to 15 times as much energy. And that hasn't really hit the market yet. And so I see energy companies, GE, Vernova as an example, as really benefiting from that. So you can make money around the edges, I think, in a more sustainable long-term way, because our utility industry, our grid, all of that needed upgrading anyway, and this is just going to accelerate the need for that.
A lot of those stocks have been bid up as well this year, and their valuations, one could say, are getting stretched too. But you think there's more upside for the utilities and some of the other sort of infrastructure providers?
Selectively, on a valuation basis, they still look, much cheaper and more sustainable long term. I mean, the building out, an energy complex, building the grid, that's probably a 15, 20-year process at this point. So I think there's a really long runway. Intel, for example, if you look 3 years out, 5 years out, when they get their CapEx starting to churn out revenue, they've got a very, very bright future. They already have a chip that they claim is going to be faster than Nvidia's. There's not, and again, I'm just trying to put a cautionary tale and some reasons where investors should be cautious, because this is where people lose a lot of money. You guys have talked about it. People have been around a long time. Look at Cisco. Cisco had the largest market cap of any company in the world. When these things turn, it's a long recovery. People forget it took 13 years for Microsoft following the peak in 2000 just to get back to where it was. That's a long time for investors that are used to making money every day.
Yeah, good reminder, Tim. Thanks a lot. Appreciate it.
You're welcome.